Welcome everybody to our webinar. This webinar is organized by Goparity, and we're going to talk about the basics of investment, looking at some very basic concepts. And then we're going to try to share with you a guide of basically how to start investing, but specifically how to start impact investing. Well, my name is Sara, as you might have noticed by now. I'm part of the Goparity team. I have a background in management and sustainable development. And at Goparity, I have been involved in promoting impact finance in an educational way, and very focused also on telling stories of projects that are seeking funding through our platform that create positive social and environmental impact. But we'll get into that in just a little bit. Here joining me today to co-present the webinar is Anna.
Hello, everyone. I'm Anna, and I'm a partnerships intern in the marketing team. I joined Goparity in March after finishing my master's in management, which is also my degree during my bachelor's, and with a specialization in marketing.
To give you a little overview, today we're going to go over the basics of investing. Okay, so what are the things we should consider before starting, or what are the basic terms we should be aware of? And then we're going to look at Goparity as kind of an example of where you might be interested to start this journey. Specifically through crowdlending, which we'll see is a very democratic and open tool for those looking to take this step, how crowdlending works, and to make this whole webinar the furthest away from anything abstract and the more concrete possible, then Anna will do a live showcase of how this would actually look like within our platform. And in the end, we'll open space for all of your questions, so bring them on. You can use the chat to leave questions throughout the session. We'll get to them if they're very easy and quick to answer. If not, we'll get to them in the live Q&A, or even we'll follow up via email if it's something more complex for some reason. Okay, so let's get straight into it. Investment basics. When thinking about any topic, I like to start by defining it. Might be my academic background, but I think this is really important because we're going to use the word investment over and over and over again in this presentation. And sometimes it's really useful to try to understand what we're really referring to when we speak about investments. So investment is the act of committing money or capital to an asset or venture today with the expectation of generating income or profit over time. Basic definition, three words that I would really like to highlight and that I have highlighted in the slide already, but that I want to give a little note on. The first one is commitment. So actually, when we decide to invest, that is a commitment. Most of the time, we can't immediately change our minds after we just made an investment. And therefore, it's important to understand what we are committing to and to keep this in mind when making that decision. The second word I would like to highlight is expectation. Of course, when we invest, we expect to receive a return on our investment, but it is an expectation. It's not a certainty. And therefore, it's important that anyone who's starting their investment journey understand that the expectation might not happen or materialize for a series of different reasons, and we'll look at some of the possibilities briefly in this presentation as well. And then over time, the idea that in fact investments do take time, that they don't happen immediately or magically, and that therefore when we decide to invest, when we make this commitment, we should have a strategy in a medium or even long term and understand how that works. Okay, now that we have defined the term investment, I brought to you definitions, or we can look at some types of investment that you probably have seen over and over. Maybe you do know the definitions, but if you are a complete beginner, and I wanted to make this session open to complete beginners, then maybe you've never actually stopped to think about what we're talking about when we talk about these types of investments. And so I brought 5 different types of investments. They could be different. We can, in the future, look into other types, but let's start. First one, stocks. Very famous way of investing. What are we talking about when we talk about stocks? We're talking about the ownership of a company. So the ownership of any company can be divided into shares, and the people who own these shares or eventually buy these shares are called shareholders. At the beginning, and for most companies, actually for their whole life cycle, companies are private. And this means that to have a piece of the company, so to be a shareholder in a company, you need to be a private investor in a private structure of a specific company. For example, in the case of a startup, initially, the shareholders, meaning the people who own the company, are usually a small group of people that include founders or a small group of investors who will invest their capital, who will add capital to finance the main activities of that company. Now, this can go very well, or of course, it can be very risky because, as we know, startups don't have a very high success rate. But if it turns out great and the company keeps growing, and with cases of companies that reach immense growth, then companies can decide to be publicly traded. What does this mean? It means that there is a moment in the life cycle of specific companies, usually huge companies, where they decide that anyone can become an owner of shares, can become a small, medium, or large shareholder in a company by releasing shares into what is called the stock market. And this is where you buy stocks. The stock market is a regulated market, okay? So there are many rules. Companies cannot just define the price of stock or how much stock they're selling or what part of the company they're selling, but it does allow for anyone to buy stock in a specific company. What are the advantages? Of course, potential for very large growth. If we think about big tech companies. I mean, if probably people who invested in AI companies that were publicly traded a couple of years ago will now have huge returns on their investments. But there is also the possibility, of course, of having no return. And there is the fact that as the company grows or suffers losses, your stock can be worth more or less according to the company's total value. So there is always the option that you will actually lose all your money, or alongside the option that you'll make a great investment and profit from this. And there we go, stocks. Second type of investment that I brought, bonds. So a bond is a form of a loan. It means that you will loan your money by actually buying a bond. Bonds are a type of debt that is issued usually by either very large companies or by governments. This means that usually countries can also emit bond, and then you can buy public debt or invest in public debt in your own country. Of course, there is risk as well. States do go bankrupt. That has happened. Portugal is a case of that. But this is usually a very predictable and safe way of investing your money. However, it does have a lower return rate. Many times, the return rate and risk in any type of investment are proportionally inverse. That isn't always the case, but it does happen a lot. So buying a bond is a type of investment, that includes lending your money. Funds. One way of investing is by basically pooling your money with a group of investors and having it managed by a third party. Funds are a great way to, for example, make sure your portfolio will be managed professionally and that your investments will be diverse. However, of course, investing through a fund still carries risk that those investments might not work out for some reason, and it usually includes high fees. So that means that whatever you're getting back in return, you need to deduct how much money you're paying for having someone or a specific platform manage your funds as well. Crowdlending, another form of loaning money. But in this time, instead of buying a bond that was issued, you are actually lending directly to a project or a company. This is the type of investment that we'll look into in detail today, because it might be a great way for you to start your investment journey since one of the biggest advantages is that the initial ticket, the amount of money you need to start, is usually quite accessible and low. Again, capital isn't guaranteed, and the success of your investment will depend on if the borrower pays back. Then, as a fifth type of investment, I brought you a category which is property and goods. It's quite general, but I just wanted to give the example that actually investments can take many forms and can include buying vintage Chanel bags or Pokemon cards. Okay, so there are types of investments where you're still committing money, hoping that you're over time your investment will grow in value, and that then you can resell it, etc. Of course, I kind of mixed up property within these categories. Of course, that's a very specific type of investment, investing in real estate, but it's still a tangible good that you can sell, etc. And has the potential also for rental income, of course. What are the risks? There is a very high entry cost. Okay, so this type of investment is not accessible. And also it might be hard to sell quickly, or of course devalue over time as interests or speculation changes. And that's it. Now, if I could give you 5 kind of steps or key steps to keep in mind before starting to invest, these are them, and let's look at them one by one. The first one is to study and get guidance. Everybody joining the webinar today has already kickstarted this bullet point for sure. But I really wanted to highlight how important it is to study before you start investing, to understand what an investment is, what are the risks. There's plenty of information online available free. Just please be careful with following certain content creators who might have very enticing promises of quick wealth and perfect investments. And I would suggest, if you're following a specific content creator, to try to make sure that they're certified or have education in economics or finance or a specific field. And if you want to seek other sources, I would highly recommend visiting the websites of the investment regulators in your own countries. They usually publish great content on risk, on how to invest safely, on what platforms are regulated, what platforms are not. And of course, regulators are always focused on investors' interests, and that's great for investing. Setting clear goals. Always define how much you can actually invest. Okay, so how much are you comfortable with investing? Do not invest savings that you'll need in the short term. Do not invest your emergency fund. Please think about the commitment and the long term, and investments should mostly be focused on disposable income. Okay, that in the worst case scenario you lose, you will still feel comfortable when. Setting clear goals is about setting the why, the what, and the when. Why are you investing? What are your goals? What would you like to achieve with your investments? What is your timeline, etc. Number 3 is the golden rule of investing. Okay, it's the old saying, never put all your eggs in the same basket. This is really important. It's true for investments across different types of investments, across different sectors, different geographies, different platforms. Make sure that as you invest, even if we're talking about small amounts and you're just getting started, you are focused on diversifying. 4 and 5 go kind of hand in hand. So be patient and stay consistent. Being patient and staying consistent has a lot to do with trying to stick to the initial plan that you defined yourself, and not just letting yourself go with, again, promises of miracle investments that will make you rich or change your life. And that's it. I think these are the kind of like 5 golden rules. If you have any questions, please ask them in the chat or save them for the Q&A. And if you have anything to add, I would also love to hear from you as well. Now, why should we start investing now? It's mainly about those 5 steps we brought before. Of course, we're trying to invest to generate more income or to generate more wealth for specific goals, etc. And it's important to keep in mind that the sooner we start, the more we'll be able to diversify, keep long-term consistency, but also for example, avoid or not avoid, but try to overcome inflation. This means our money losing value. Of course, we know that 100 euros in 2020 are not worth the same thing that they are worth now. Oops, I think someone unmuted. They're not worth the same thing that they are worth now. And that by investing, we might, if not generate major wealth, at least be able to maintain the value of our money uh, uh, throughout the years. But to guarantee that our investments make sense and that everything we're investing in will still be here in the future, it might be important to be conscious about how are we investing our money and in what are we investing our money. And this is where impact investing comes in. It is not the same to invest in fossil fuels or to invest in weapons and the defense industry than it is to invest in, let's say, sustainable energy or regenerative agriculture. There are differences in the impact of these investments, not only for our wallet, but also in the long term for everybody, for the economy in general, and for people and the planet. So what is the definition of impact investing? It is exactly the same definition we saw for investing, but we add a layer. So we're not only expecting financial returns, we are expecting financial returns alongside social and environmental positive action, positive impact, sorry. Um, and in fact, impact investing can be very empowering because money moves the world, yet people have no say usually in where it goes. What do I mean by this? I mean that our money sitting in our bank account or being deposited in a fund or a specific savings account is being managed in a way that we have no control over. Usually, our banks are making investment decisions on our behalf with our, not usually, they are making investment decisions on our behalf always, and usually we have no say over that, and we don't even have access to information to actually understand how that money is being used. There are a lot of interesting reports about this and about the impact of the investments made just using people's savings accounts or people's current accounts. And I highly recommend that you take a look at that if you're not already aware of this issue. And I wanted to share a piece of data from one of our partners, Andres Lenner, who has a book called Mind Your Money. And he actually came to the conclusion that impact investing is an individual action that we can take if we're worried about these topics, about environmental and social sustainability, that will be 20 times more effective than combining reduced meat consumption, flights, and driving our car. So that's how powerful our money is. And that's where Goparity comes in. We're here not only to help everybody start investing and kind of guide you through this process, but also to help direct misaligned capital into projects that create a positive impact. And let's get into it. And I don't know if any specific questions came up that we should look into now.
Until now, none. So you can.
So quickly about Goparity. Goparity is an impact finance app that allows people to use and companies to use their money for good. This means our goal is that, for example, everybody joining this session can use our platform to invest in projects that generate positive impact, and especially that anyone who might still need a little push in financial literacy, who doesn't feel confident, our platform is built to be very educational, to have a lot of available information, and to empower people to do so. On the other side, we also provide funding options for companies projects that are seeking funding for projects aligned with the United Nations Sustainable Development Goals. In a very short summary, we want to be accessible, and that's why anyone can invest in crowdlending starting with 20 euros. And this is one of the reasons why I explained that crowdlending might be a great place to start. Even if you just want to learn about investing, you just want to understand how to really start, you can start with 20 euros one time. Okay, there are no obligations to keep investing, but of course, you can also invest 20 euros in 2 or 3 times in different projects, start to build a diverse portfolio, manage that portfolio, understand what that means without a huge commitment as happens in other forms of investing. We're transparent. I think I've said something about that already. And we are focused on impact alongside financial returns, so anyone can track their investments in their app as well. On a formal definition, we are a regulated crowdlending and crowd equity platform. We have a license under the EU crowdlending regulation, and we also have an office in Canada where we operate under a Canadian license. Here you have our impact pillars, and you can take a look at that on our website as well. About our community, Goparity isn't just starting, okay? We've been around for a while. We have over 60,000 registered people using our platform. Collectively, I love how these numbers are so similar right now, but collectively they have invested around 60 million euros in impact projects. To be more specific, more than 500 crowdlending campaigns focused on impact across 4 continents and many, many countries, as you can see on this map. So by joining Goparity, you would be joining a community that's quite that's in a growth process already. Regarding where your money goes, we'll get more into detail about this later, but I wanted to give you a quick summary that every single project seeking funding through the platform will fit into one of our 5 impact categories. As you can see, most of the projects, 50% of the projects, have fit the sustainable energy category, but we have as well, and we will keep doing it in the future, offered dozens or hundreds of impact investing opportunities that focus on blue economy, green economy, agri-food systems, or the social economy. And we're starting to get to the point where we explain how this actually works, and I hope that if it's still a bit abstract, it becomes as concrete as possible. Let's look into how crowdlending looks specifically as an option within Goparity to start impact investing. Of course, you can always go back to the initial slides and eventually look at other options, other forms of investing, other platforms. We have unmuted mic again. Okay. Okay, so crowdlending. Crowdlending, as I explained before, is a form of investing in which you lend money directly to a company, which we call project promoter at Goparity, a company that's seeking funding through a loan. In this case of crowdlending, and that is the same across crowdlending platforms, a loan will have fixed conditions. What does that mean? That once you're loaning the money, you know what is the term of the loan, meaning the maturity of the loan. Imagine if you seek credit to buy a house, or you already know for how long you'll be paying the house back. Of course, if we're speaking about housing credits, those are very long maturities, like 40 years. At Goparity, maturities are usually much shorter. We're talking about some maturities of 6 months, some maturities of 2 years, some of 5. In some cases, for major solar projects, we can have a 10-year maturity, but that has been, I think, the longest maturity we have offered so far. So you can understand your maturity, you can understand the interest rate that you'll be paid back yearly on your loan, and you can take a very detailed look at what your payment plan will look like if you decide to invest those 20, 200, 2,000 euros to this project promoter, and you will be paid over time according to the agreed schedule. And so what we have here is a community of people, okay? So in the Goparity case, the community of people who are registered in the platform who collectively lend money to a project promoter, an organization seeking funding to fund a project that will generate positive impact. And then they receive their payment over time with interest, and every investor is able to track their impact as well. Again, this is not a donation, and these are not shares. You're not buying ownership in the company. In this case, we're speaking of loans. In any campaign page, and Anna will show it to you in just a minute, you'll be able to find a project description. So how will the money be used? An impact description made by our impact specialists, impact managers, a risk analysis of the project, and then two regulated documents, financial statements of the company, where you can look into the specific finance of that financial situation of that company, and a key investment information sheet, or KISS document, which has a great name, I think, and a KISS document where you can see in detail every term of this loan, every condition, etc. And so to get started, we have 5 steps. Again, you just need to sign up into the platform. Okay, you do this using your email and creating a profile. Then you are connected to MangoPay, which is our payment provider. Okay, Goparity isn't holding your funds at any moment. We work with a regulated major payment provider for transactions called MangoPay. In the 3rd step, you verify your identity. This is obviously essential for any financial platform to make sure we have the validated identity of every single person using the platform and investing through the platform. Then we have a small questionnaire to make sure what type of investor you are. This is to protect investors. So sophisticated investors will be able to invest larger amounts. Non-sophisticated investors will have a cap on their investments. Then you can top up your wallet and go. After registering, you can choose from any open opportunity, read the KISS document, start investing starting from 20 euros, and then, of course, diversify over time. A quick note on investing and diversifying over time. Goparity does have the option, once you feel comfortable with the investments, once you feel like you understand the platform, to set an auto investment strategy where you set your specific criteria. Okay, I want this level of I want this range of interest, this maturity, this impact category, and basically the platform, and this amount per investment, and the platform will invest automatically every time there is a opportunity that matches your criteria. And just before moving on, I want to talk about risk in a more specific and focused way regarding crowdlending and regarding Goparity as well, because that's what we're talking about right now. So, managing risk with crowdlending. First, capital is not guaranteed and is usually not covered by deposits or compensation schemes. Okay, this means there is no guarantee of capital. So I would suggest that you invest only money that you can afford to eventually have tied up, or in an even worse case scenario, potentially lose. Different projects offered on the platform, different investment opportunities, will hold different risks. They all go through the same risk assessment done by specialists, by our team, and by a third-party provider to have a second opinion. But it's very important that you understand different levels of risk for different projects. When guarantees exist, and I think I just saw a question about guarantees popping up in the chat, but I'm not sure. When guarantees exist, which is most of the time, they support recovery, but they don't fully remove risk. Do check project guarantees. It is very rare that we open a project campaign without guarantees, but there are many different types of guarantees, of course. Diversifying across several projects rather than concentrating in one is the main way to manage risk. I think we spoke about this in depth. And also, you can eventually use the auto investment tool to help you diversify automatically. If a payment plan is in default, Goparity will represent the investors, okay, and in the recovery process. But do keep in mind that recovery processes depend on courts and can be quite long. Like all investments, crowdlending carries risk, but I would say it's a great way to start investing, starting with small tickets and building up your confidence and understanding how investments work. Okay, so let's start with the first one here about different interest rates. Why does every loan have different interest rates? I imagine it's because of the risk of the project. Is that right? Who defines the interest rate? Thank you so much for this question. That is correct. There is a more or less direct correlation between risk and interest rate. You can read about our credit policy on our website. We have a fully published document that explains how the risk assessment is done and how the risk rating is also attributed to specific projects. However, you might have cases where there are other variables to account for that aren't only the risk rating or the interest rate, such as strong guarantees or just the company's financials or other references such as that. In the future, we have never done this, but it's also possible that we could have a open campaign with a very low interest rate if we're talking about, let's say, a project that where the impact is just, the social impact is just so immense that it would make sense to offer this investment opportunity to our community. However, that would be very clearly communicated if that correlation falls or is being ignored for some reason. I hope that answered the question. Let's go on to the next one. Questions. What is the average annual return I can expect? Goparity project protected or assured in any way that the loan is not returned? How does Goparity make money? What is the tax declaration? Okay, so this question has many questions within. I love it. They're all great. The average annual rate and the performance of the general portfolio are published. I don't have the exact numbers right now. And then maybe if you, in our statistics page, you can share our statistics page here, and you can share the article we just published about the overall performance of the portfolio since Goparity was founded, and where we also speak about, okay, if all the projects that have been defaulted would actually not pay back, would there still be, what would the interest rate look like in that case? And we made a series of negative scenarios that you can analyze. Is the money protected or assured? No, the money is not protected or assured. There is risk of losing part or all of the capital invested. However, of course, even if there's a default, there's also a big probability that the money can be paid back if there are strong guarantees and a series of other variables. How does Goparity make money? Great question. So our business model is basically the one of any financial institution that's managing loans. We have a setup fee and a management fee for the loans for our clients that are the companies seeking funding. And we, of course, offer them several services, such as building and preparing the crowdlending campaigns. And that's the main focus of our business model. For investors, there are no costs at the moment, and we will keep investment free, but it's possible that with time we can build specific premium features or other type of products like that. How is the tax declaration managed for those of us who live outside of Portugal? Every year at the end of the fiscal year, you get a income statement that's very detailed. And with that income statement, you can fill in the tax form of whatever your fiscal country is. So then, of course, we always recommend people, if they have questions, they should consult their specific fiscal national fiscal offices. I don't think that sounds right, but I think everybody understood what I was trying to say. Now, what tangible collateral backs the investment? What protections are in place against default? Thank you for this question. Again, it varies a lot. We can maybe talk about, we can have mortgages if there are properties involved. We can have personal pledges if we're talking about companies where the shareholders will give a personal pledge for as a guarantee for the loan. We can also have pledges on different assets. Imagine in a major solar panel installation, there can be a pledge on the solar panels and the batteries and generators themselves. So it's a question of looking into each case and trying to see if you feel comfortable with the guarantees. The protections in place are, again, the specific guarantees are standard risk assessment, but also the fact that Goparity will represent the investors and in case of default, initiate a legal, if it comes to that point, which thankfully doesn't happen often, we will initiate a legal recovery process within the legal system of the country where the promoter is based. Okay, so next question. It's very difficult to make a comparison. Usually between a bond or crowdlending, usually if you're buying a public debt bond, then it will be it's usually a more secure investment than crowdlending, where you're lending directly to companies that are in a financial position to seek debt, but might not have the same type of infrastructure, or will not have the same type of, I mean, they might, but they might not, the same type of infrastructure as a company that's issuing bonds, because that's a very different level of financial maturity, usually. I think that for someone who feels like they want to compare and want to feel more comfortable, again, starting with small amounts, diversifying, tracking your portfolio over the course of a few months, a year, and seeing how you feel about this. When it comes to default, again, everything's published, and you can look at our statistics page and our portfolio performance article that we just published. Christina says, I understand Goparity merged or purchased La Bolsa Social not that long ago. Are they still operating as a separate entity for social investing, or are you now sharing the same projects? Yes, so that was a very big milestone for Goparity. This year, Goparity purchased La Bolsa Social, which is another crowd lending, crowd equity platform. They have been operating in Spain for over a decade in the social impact crowdlending, crowdfunding field. And both entities still exist, but they're all operating under the Goparity name, the Goparity brand. All the projects will be, and all the investment opportunities will be offered in one single platform, in the Goparity platform, our app, our website. And we also integrated the team, and we had already several team members in Spain, and we now definitely consider ourselves an Iberian platform, and we're very happy about this step. Perfect. Okay, so to everybody who's present here, we will send a detailed step-by-step tutorial of how to invest, and we will also explain a little bit, that was what Anna was going to do. We'll explain a little bit more about where to look, what to read when you see a project page, where to find the information, how to interpret the conditions, because we're talking about interest rate, we're talking about maturity, but how can an individual investor interpret that and understand what that means for them specifically, if it's not clear already, or if you don't have the financial knowledge to do so. Apart from that, I would like to thank everybody for being here. and for all your questions. If you have any questions left, please contact us. We have our support team available to help you at any moment. Here in the slide, you can see support@goparity.com, and we will get back to you as soon as possible. So thank you so much for joining. Gracias.
Thank you.
Gracias. Obrigada. Obrigada a todos. Thank you.
Hi everyone, I'm Anna and I'm a partnerships intern here at Goparity, and today I'm going to show you how simple it actually is to invest through the platform. I'll go step by step so you can follow along at your own pace. So the first step is to create an account and validate your identity. This part is really important because without validating your identity, you will not be able to invest due to safety and regulations. But it's very simple, you just need a passport or an identity card. And if you run into any issues, please send us an email to support. So after registering and logging in, this is what you see, your dashboard. In here, you can see your total assets, which are divided into three values. Currently invested, which is the money you have in ongoing investments. Available balance, which is what you have ready to invest right now. And captive balance, which is the money you have invested on projects that haven't closed yet. Let's say I want to invest more than what I have currently available. I click here, top up, and I have two options. By card, which arrives instantly, and is just like any other online payment. You just have to add all your card details, and you'll likely be asked to confirm the transaction through your banking app. Or you can do it by a bank transfer, which takes between 1 to 3 business days, and you can do directly through your home banking using the IBAN that we provide. The IBAN, the beneficiary, and all of the details you need to do to do the bank transfer is here. You just have to click and you have everything. So I already have the money I need to invest right now, so I will move on to the investment part itself. I click here, invest, and this is what I will see. On the top left, I can see which projects are funded, which projects are reserved, and which ones are open for investment. And in the card, I can see how much it was raised until now, the target amount, the interest rate, the frequency of payments, and the term of the loan. When I click on a project, I'm going to show you this one as an example, which is a coffee cooperative in Peru. I can see the percentage funded, and here on the right, I can see the investment conditions. If you click here on the icon on the information button, you can see the explanation of all of the terms if you need to. I'm going to show you what these terms mean in this specific case for this project so that you have an idea. So this project has a 9.95% annual interest rate paid monthly during a 6-month period, and it has a grace period of 5 months, meaning that for the first 5 months, you'll only receive interest. And the risk rating here is C, which reflects Goparity's own risk assessment for this particular project. A+ is the safest, C- is the riskiest, and it's also the highest risk you'll find on the platform since we never list anything below that. Keep in mind that all of these numbers are just an example, so the interest rate, the term, and grace period will always vary from project to project. Below the main project header, if you scroll down, you'll find the information about the project and specifically what this campaign will finance, because we believe in being transparent about this, so you can always see in detail exactly what your investment will go towards. If you keep scrolling, you can also see the impact of the project, the impact category, what this project will generate, and which sustainable development goals it contributes to. You can also read about the financial information, and you can download the key investment information sheet and the financial statements, which are two very important documents that you should always read because they have the key regulatory and financial information about the project and the promoter. If you keep scrolling, you can find more about the company behind it, which is the promoter. In here, you can also visit their website to know a little bit more. You can read about the business model and about the team behind the project and their background. So overall, everything you need to do your own research before deciding, it's right here in the same page. Before investing, you can also simulate your investment. So you enter the amount. I'm going to do 100 euros as an example, and you can see how much you get back and when, and what you will receive as interest with this investment. So after you've done your research and you are happy with the project you chose, you can invest. So to invest is super easy. You click here on the yellow button, invest. You put the amount. Today I'm going to invest 20 euros. And if the amount you want to invest is higher than what you have available, the platform will ask you to top up in the next step. You'll click here, continue. You'll be asked to review everything and accept the terms. In here, you have another very important document that you should always read. And if for some reason you want to cancel your investment, you can do that too. You have up to 4 days to do so. And that's it. You click confirm. And you'll receive the confirmation through email, and you'll also see the confirmation on the screen. A few days later, once the project is fully funded and the contracts are signed, it will show up here under loans. And in this page, you can see all of your ongoing investments. And in each card, you can see how much you invested, how much you got back so far, and when it will be your next payment. And that's the whole process. I hope it was all clear. Thank you so much for watching. And if you have any questions, feel free to send us an email. Thank you.